Welcome to the Crypto Trading Tutorial for Beginners, Part 8, Stop Loss.
All right, let's get right into it. There's this one big misunderstanding about risk. It's a myth that trips up pretty much every new trader. But today we're going to pull back the curtain on a little secret, and once you get this, it is going to completely change how you look at trading.
So, take a look at this. Risking $20 does not mean you only buy $20 worth of Bitcoin. Now, that probably sounds a little weird, right? I mean, how can you risk just $20 but buy, a couple hundred or even a couple $1,000s worth of crypto? It feels impossible. But trust me, figuring out this little puzzle, that is the key to trading smarter and a whole lot safer.
Which, of course, brings us to the big question. How do you actually do that? How can you get in on a bigger market move without putting your whole account on the line? How do you separate how much you buy from how much you're actually willing to lose? Well, there is a tool for that, and it is absolutely essential.
And the answer is something I like to call a financial safety net. Think of it like a pre-planned, totally automated system that protects you from, a really bad loss. And this isn't just a nice-to-have strategy. It is arguably the single most important tool you have for managing your risk.
And that safety net, it has a name. It's called a stop loss. So what is it? It's just an automatic order. It's an instruction you give to the exchange before you even get into the trade. You're basically saying, hey, if this thing goes south and the price hits this exact number, get me out. Sell it for me, no hesitation, no questions asked.
I love this analogy because it's perfect. Imagine you're a tightrope walker. You're not planning to fall, of course, but you've got that safety net underneath you, just in case. A stop loss is literally that for your investment. It's there to catch you and make sure a little slip-up doesn't become a total disaster.
Okay, so theory is one thing, but let's make this super practical. We're going to walk through a real-world example using Bitcoin so you can see exactly how powerful this tool really is.
All right, let's just walk through these steps together. Step 1. You buy one Bitcoin at $50,000. Simple enough. That's your position. Now, Step 2. Right away, you set up your safety net, your stop loss, at $49,000. Okay, so now let's say the market turns against you. Step 3. The price starts to drop and it hits $49,000. What happens? Step 4. The instant it hits that price, the exchange does its job and sells your Bitcoin automatically.
So let's just pause right here for a sec. You bought in at $50K, you were automatically sold at $49K. Think about it for a second. What was the actual amount of money, in dollars, that you lost on that trade?
Okay, you got your number? Let's get to the answer, because getting this is the big aha moment. This is where it all clicks, where we tie it all back to that myth from the beginning, and you see how you can control your real risk.
The answer? $1,000. That's it. Simple math, right? You bought at $50,000, you sold at $49,000. The difference is $1,000. And that was your total loss, a loss you defined ahead of time. It wasn't a surprise, it wasn't a panic sell, it was all part of the plan from the get-go.
And this right here is the whole secret. Just look at the two columns. Your total purchase value was a huge $50,000, but the total money you were actually risking, just $1,000. See how that works? The stop loss lets you completely separate those two numbers. You were controlling a $50,000 asset, but you only ever had $1,000 on the line.
So what's the big takeaway here? Basically, think of a stop loss as your personal risk control dial. First, it separates how much you buy from how much you actually risk. Second, it gives you precise mathematical control over your potential loss, no guesswork. And third, because it's automatic, it pulls all the emotion out of the equation. And all of that together, it empowers you to trade with way more confidence because you know your downside is protected.
If you need a daily analysis of the market and useful tips about crypto trading, subscribe to Trade Compass and hit the bell. See you in the next part.